For example, if you bought a house today for $930,000 and then in 10 years later it's worth $1.9 million, that's actually a capital growth rate of around that 7.5% per year.
Typically, apartments in the areas that I work in have a slightly higher yield than houses, but then houses tend to have better capital growth long term.
Taking the emotion out of it, what actually makes a good property investment? When buying a home, it's all about emotion and lifestyle. But when investing, that's a numbers game. Today, we're decoding the jargon and cracking the code to making your property portfolio thrive with Westpac Home Loan Specialist Anthony Granada and Michelle May, prominent Sydney buyer's agent. Anthony, first question. When you are looking at a property as a potential investment, is there a certain equation that those in the know look for? Is there such thing as, say, a foolproof checklist for evaluating an investment property?
Well, Alice, there's no such thing as foolproof, but yes, there are some tried and tested ways to assess a potential property for its ability to create that value. What we look at are the three pillars. So you have your rental yield, your capital growth potential, and suburb resilience. Now, for anyone that's new to investing, that can sound a bit overwhelming, but we can help break that down.
Let's talk rental yield. What is it and how is it calculated?
Rental yield is a number, so specifically a percentage, and that helps you figure out how much money you're making from rent compared to what the property actually is costing you. That is, how much money you received in rent minus the expenses, like maintenance and insurance costs, divided by how much the property costs. Then you multiply it by 100 to get the percentage. The higher the number, the better the return. Look, there are easy ways to assess the numbers online using Westpac property market research tools.
So then what percentage is seen as good?
Well, typically investors aim for 4% or more, but of course there'll be variables there. High growth corridors may be slightly higher, 5%. Inner city houses will be lower, 3% say. So it'll be around that number.
So what is capital growth?
Capital growth means a potential increase in property value over a longer period. Put simply, your property is worth something today, but in 10 years' time, due to an increase in demand in that suburb, it might actually be worth more. For example, if you bought a house today for $930,000 and then in 10 years later it's worth $1.9 million, that's actually a capital growth rate of around that 7.5% per year. So it's harder to predict, but if you do your research, you choose a good suburb with good growth potential, you could see real increases in value over that time.
Well, that actually brings us really nicely into suburb resilience. What do we mean by this?
So suburb resilience really speaks to the underlying demand of people wanting to live there, rent there, purchase there in the future. So you've got to look at things like connectivity, transport, good schooling, but also low vacancy rates, population growth. So it's a multifaceted approach that you have to look at.
How do you confidently invest in areas where you don't have that local knowledge without then getting burned?
Well, you could, of course, hire a buyer's agent with local market knowledge, but don't underestimate the power of your own research. Look at vacancy rates, that kind of things, new shopping centres opening, read the newspapers, really educate yourself, and the more sources you can draw from, the better.
And make the most of the data that's out there. Westpac Property Market Research can show you things like how much prices have gone up in the past, who's renting in the area, and whether it's a flood zone. For example, a suburb might offer good rental returns, but if there are already heaps of apartments in the area, it could make it harder for your property to grow in value over time.
Okay, guys, let's settle this debate. Apartments or houses for long-term gains?
Well, I believe it's all dependent on the actual asset selection. If you're going for A-grade properties within your budget, it may well vary. Typically, apartments in the areas that I work in have a slightly higher yield than houses, but then houses tend to have better capital growth long term. But make sure you just go for the best possible property within your budget.
Okay, well, final question. Give us your tips to get started on that property investment journey.
Yeah, you don't know what you don't know. So start having conversations very early. Reach out to Westpac and a financial advisor to help inform and guide you along that property investment journey.
I think whilst it's really important to look at the numbers, it's also important to understand who your actual clients, your tenants pool is going to be, and subsequently also your buyer pool down the track. So is this property that you're really interested in actually attractive to different tenant pools? So is it just attractive to young couples or also sharers or a young professional by themselves? So understand who your potential tenant is before you sign on the dotted line.
Massive thanks, Anthony and Michelle. You've been amazing with these investing tips and tricks, so thank you so much.
Pleasure.
Thanks for listening to the Buyer's Handbook. Join us next time for more answers on the topics that matter most. For more help with your property journey, head to the Westpac How to Buy Hub on realestate.com.au. Conditions, credit criteria, fees and charges apply. Residential lending is not available to non-Australian resident borrowers. This information is general in nature and has been prepared without taking your personal objectives, circumstances and needs into account. You should consider the appropriateness of the information to your own circumstances and, if necessary, seek appropriate professional advice.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.